Hi guys, this is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. Today's class will be revising SAE 3400 is standards on assurance engagements. Basically, in this chapter, we'll be having three standards: SAE 3400, SAE 3402, SAE 3420. In the current class, we'll be revising SAE 3400. Okay, now first of all, is SAE means standards on assurance engagement. What is the difference between auditing standards and SAE? Basically, auditing standards, they will be used to provide assurance on historical financial statements. Now, auditor, he will be appointed not only for providing assurance on historical financial statements. There will also be certain engagements wherein the auditor will be appointed to provide assurance on other than historical financial statements, such as best example prospective financial statements, or to provide assurance on internal controls. So whenever auditor is appointed to provide assurance on items other than historical financial statements, then this SAE series comes into picture. Hope that is clear. You should not confuse that. Even in case of audit of historical financial statements also, auditor will provide assurance only. Here, in case of standards on assurance engagement also, auditor will provide assurance only. But there, as per standards on auditing, assurance will be provided on historical financial statements. Whereas in this SAE, auditor, he will provide assurance on items other than historical financial statements. Hope that is clear. So, assurance engagement. What is meant by a assurance engagement? Related to examination of subject matter other than historical financial statements. That means audit of historical financial statements, we will not call it as assurance engagement as per this SAE. Okay, yes, even in historical financial statements also, auditor will provide assurance only, but for that, standards on auditing will be applicable. This standards on assurance engagement will not be applicable. As per standards on assurance engagement means those engagements which are related to items other than financial statements. The auditor, he will provide this assurance on items other than historical financial statements. Hope that is clear. So these assurance engagements, standards on assurance engagements, there are three types. Basically, three standards on assurance engagements have been given by the institute. One is SAE 3400, which deals with examination of prospective financial information. Prospective financial information means historical financial information will be prepared after completion of the transaction. That is, after completion of the financial year, historical financial information will be prepared. Whereas prospective financial information, it is related to financial information of the future till the transactions have not taken place. Okay, the financial information related to future is known as prospective financial information. We'll be discussing this. There will be three types of prospective financial information that we'll discuss. And next one, SAE 3402. Now, whenever auditor is appointed to provide assurance on controls at service organization, SA 402 we have discussed. Okay, controls at service organization. Now, auditor, if he is appointed to provide assurance on controls at service organization, then requirements of SAE 3402 will be applicable. In the same way, if auditor is appointed to provide assurance on compilation of pro forma financial information, then SAE 3420 will be applicable. These two standards will discuss or will revise in the next class. Now we'll see with SAE 3400. Okay. So, prospective financial information. What is prospective financial information? Prospective financial information will be related to the future, which will be prepared based on certain assumptions. Why assumptions will be made? Because such transactions, they have not yet taken place. So you will take some assumptions. Now, this prospective financial information, it can be either forecast. Forecast means here in this forecast, the assumptions that you will make will be based on the past history. Okay, based on certain underlying data, you will make the assumption. Let's say, for example, for past 10 years sales have been increasing at a rate of 5% each year. So now also for preparing prospective financial information for next 3 financial years, you will take assumption that the sales figure they will increase by that 5% rate only. This is known as forecast. Okay, wherein you are forecasting based on the past data. You are making assumption based on the past data. There is a certain underlying data that is known as forecast, which is one type of prospective financial information. Next, uh, projection. Now under this projection you will be making hypothetical assumptions. Let's say for example, in future, after some 2 years, if a competitor arises in the market, then the market share of our company decreases. If market share of our company decreases, what impact it will be having on the financial, what will be the financial picture? Okay, now if you prepare your financial picture taking this type of assumption, okay, wherein a competitor will arise, or let's say after 1 year bank they might deny to give the loan, okay, they don't want to extend credit facilities, then how our financial picture will look like? So based on certain hypothetical assumption, okay, hypothetical assumption means those assumptions it is not clear whether they will actually occur or not. Those are just hypothetical assumptions that are made by management. There will be two types of assumptions. One is hypothetical assumption, which I have discussed. Next one is best estimate assumption. Best estimate assumptions will be made based on past trend, based on certain underlying data. Best estimate assumption will be made. Okay, best estimate assumptions are more likely to occur. Like the example that I have given, in the past 10 years sales figure has been increasing at a rate of 5%. Now if you take assumption that in the next year sales will increase either at 5% or 6%, then this is a best judgment, a best estimate assumption. Hope that is clear. So forecast, it will be based on assumptions management expects to take place. Mostly in case of forecast, the assumptions will be best estimate assumptions. And based on that future actions, what action management will expect to take, okay, based on that future occurrence of any event, what action management will take. Based on this you will prepare a financial information, okay, that is known as forecast. Coming to projection, based on hypothetical assumptions which are not necessarily expected to take place. Okay, these hypothetical assumptions are not expected to take place, they might take place. Okay, there is a chance that they might take place, and there is also a chance that they might not take place. So they are hypothetical assumption. Okay, however in the, for preparing projections mostly you will be using hypothetical assumptions. You'll also be using some best estimate assumptions also. Hope that is clear. And combination of both. The third type of prospective financial statement is combination of both projection and forecast. Hope that is clear. So these are the three types of prospective financial information for which the auditor can be appointed to give assurance. Now, in case of prospective financial information, auditor he will give assurance not on the financial information, not on the prospective financial information. Auditor will give assurance on the assumptions that have been taken by the management. Okay, here in case of SAE 3400 auditor, he is giving his assurance on the underlying assumptions but not on the prospective financial information, because auditor he cannot tell whether this prospective financial information they will be true or not. He cannot say that because it is related to future. Auditor doesn't know how it will take place in the future. But what auditor can do, auditor can give assurance whether the assumptions that the management has taken for preparation of these prospective financial information are reasonable or not. This type of assurance the auditor can give. So here in case of SAE 3400 auditor will give assurance on the assumptions only. Hope that is clear. So scope of SAE 3400, it provides guidance on how to report on prospective financial information, and this SAE 3400 is not applicable for the prospective information which is in the nature of narrative information. Okay, which is given in that in the narrative terms. Narrative terms means the paragraph format. If you are giving any prospective financial information, then for that SAE 3400 will not be applicable. If you are giving assurance on narrative terms, then SAE 3400 should not be applied. And principles of other standards on auditing can also be applied by the auditor wherever applicable in this situation. Okay, while providing assurance on prospective financial information, if at all there is any requirement to apply any of the standards on auditing, then the auditor he can apply the requirement of that particular standard. Okay, it is not that auditor has to use only SAE 3400. If at all there is any requirement, he can also use the requirements of standards on auditing. Next, considerations before accepting the engagement. Before accepting this engagement, okay, of providing assurance on prospective financial information, what aspects will be taken into consideration by the auditor? First of all, what is the intended use of the information? Okay, why management is preparing this prospective financial information, and whether this prospective financial information it will be made available to all the general public, or its circulation is limited, that will also be taken into consideration by the auditor. See whether it is general or limited distribution of the information, and what are the nature of assumptions that the management has taken for preparing this prospective financial information, whether they are best estimate assumptions, whether they are uh, this what is that hypothetical assumptions. And auditor he will not accept the engagement if the assumptions that have been taken by the management are unrealistic. And you should also consider what is the period that have been covered by this prospective financial information, the period covered, and also what are the elements that are included in the prospective financial information. All these aspects will be considered before accepting the engagement. And nature of assurance, I have already told you, assurance will be given on the assumptions, on the underlying assumptions, but not on the prospective financial information. And yes, management is responsible for preparation of a prospective financial information based on the assumptions. It's the responsibility of the management. Next, association of professional accountant with prospective financial information, whether professional accountant can associate his name or the name of his firm with the prospective financial information. You see, as per clause 3 part 1 of schedule 2 to Chartered Accountants Act, a chartered accountant in practice will be deemed to be guilty of professional misconduct if he allows his name or name of his firm to be associated with the earnings based on future contingency in such a way that uh, he gives a belief that he vouches for the accuracy of the forecast. If he uses his name or the name of his firm in such a way that he gives a belief to the users that he is watching for the accuracy of that forecast, then that particular chartered accountant will be deemed to be guilty of professional misconduct. So you should not associate with prospective financial information in such a way that you will give a belief that the forecast is accurate. However, you can associate yourself with the prospective financial information provided you give clearly what is the source of information. In your report you will mention what is the source of information for preparing this prospective financial information, and what are the assumptions that have been taken. Okay, basis of forecast and major assumptions that have been taken by the management for preparation of prospective financial information. If all these are mentioned, then you can associate yourself with the prospective financial information, but you should not associate in such a way that you will give belief to the users that you are watching for the accuracy of the forecast. You cannot watch for the accuracy of the forecast because you don't know whether it will occur or not, because it is related to the future. Hope that is clear. Next, duties of member examining the prospective financial information. Basically, whenever you are appointed to provide assurance on prospective financial information, you need to obtain sufficient appropriate audit evidence that management has prepared this prospective financial information based on the assumptions. Okay, assumptions have been properly followed for preparation of prospective financial information, and best estimate assumptions are not unreasonable. The best estimate assumptions that the management has taken, they are not unreasonable. Next, the hypothetical assumptions that you make should be consistent with the purpose. That means, let's say, for example, you are trying to bring investors for a tech related startup. Now, you are preparing certain prospective financial statements for this tech related startup. Then, the hypothetical assumptions that you make should be related to the tech industry only. You should not take the hypothetical assumptions related to some other industry like manufacturing industry or the agricultural industry. Okay, so the hypothetical assumptions that you take should be consistent with your purpose, and all material assumptions that you have taken should be clearly disclosed in that prospective financial information in the form of notes. And prospective financial information are consistent with historical financial statements. That is, whatever the accounting policies that you have used for preparing historical financial statements, the same accounting policies you should use even for the preparation of prospective financial information. However, you will be using certain additional assumptions for preparation of this prospective financial information, but the basic accounting principles that you have used for preparing this historical financial statements, they should be consistently used here also. Hope that is clear. Next, matters to be considered in determining nature, timing, extent of procedures to be applied for examining this prospective financial information. First of all, you will consider the knowledge that you have obtained in the previous engagement. You have conducted audit of historical financial statements. Then the knowledge that you have obtained in that engagement, you will use to determine the nature, timing, extent for the purpose of procedures to be applied for this prospective financial information. In the same way, management's competence to prepare prospective financial information, whether they are having knowledge with for the preparation of this prospective financial information, and what could be the likelihood of material misstatements in this prospective financial information, what is the source adequacy and reliability of the underlying data. Okay, for you, for preparing this prospective financial information, you will be using data. So from which source that data is obtained, and whether that data is reliable or not, and stability of the entity's business, because here there will be assumptions that will be involved. The chance of assumptions becoming true will be high when the business of the entity is stable in nature, and extent to which management judgments will affect the prospective financial information. Okay, to what extent the subjective decision of the management will affect the prospective financial information. Based on all this, the auditor, he will determine the nature, timing, extent, and presentation and disclosure. In these prospective financial information, the disclosures that will be given in this prospective financial information, they should be informative. Okay, when the users read those disclosures, they should be useful to them, but they should not mislead. Okay, the information that you disclose in this prospective financial information, that should not be misleading, and you should disclose the accounting policies that have been followed for preparation of this prospective financial information. If there is any change in the accounting policy when compared to the historical financial statements, then why that change has taken place, and what effect this change will have on the prospective financial information. See, disclose accounting policy. If change from the most recent historical financial statements, then disclose the reason for change and the effect of change on the prospective financial information. And assumptions, what assumptions you have taken, that also you need to clearly disclose in the prospective financial information, including whether that assumption is best estimate assumption or the hypothetical assumption. You need to disclose it properly, and date as of which this prospective financial information is prepared. Here, the date of prospective financial information is very much important, because the assumptions that you take for preparing prospective financial information, they might change as the time passes. So as on the date on which the prospective financial information is prepared, whether the assumptions that the management has taken, whether they are reliable or not, for that purpose, the date of the prospective financial information is very much necessary. So you need to disclose the date as on which this prospective financial information has been prepared. And finally, coming to the report on examination of prospective financial information. Report, it is quite general. You'll be having title and address, identification of prospective financial information. Okay, you'll identify the prospective financial information on which you are giving the assurance or which you have reviewed, and reference to applicable standards on auditing. If you have used the requirements of any of the standards on auditing, you will give a reference to that your report. And statement of management responsibility for preparation of this prospective financial information, you will clearly mention the report that management have prepared this prospective financial information. And reference to purpose or restricted distribution of prospective financial information, what is the purpose of this PFI, and whether there is any restriction on distribution of this PFI, that you will clearly mention. And state that examination procedures included, okay, what examination procedures you have uh, performed, okay, what procedures you have performed in this engagement, that you will clearly mention. And state whether anything causes to believe that assumptions do not provide reasonable basis for the prospective financial information. You have conducted various procedures now. Based on that procedures, whether you have come across any situation which makes you to believe that the assumptions that have been made by the management are unreasonable for the purpose of this prospective financial information. If at all there is any such unreasonable assumptions, mention them in the report. And what is your opinion whether this prospective financial information is properly prepared based on the assumptions or not? Okay, what is your opinion on this? You need to give the opinion. And caveats concerning achievability of results indicated by the prospective. Caveats means for certain assumptions there will be certain conditions. Okay, only if this happens, this assumption will hold good. If this situation doesn't happen, this assumption is no longer valid. Okay, like this, for certain assumptions there will be caveats. What are the caveats for the assumptions taken by the management? If at all there are any caveats, caveats means terms and conditions. If there are any conditions attached to the assumptions, those conditions also you need to clearly mention. And finally, date, place, and signature. This would be the brief content of the report on examination of prospective financial information. FI means prospective financial information. Hope that is clear. By this discussion of SA 3400 gets completed. If you want to get this chart, you can download it from the link that I will be providing in the description. And if you want to purchase our classes, you can visit our website lecturepedia.in and you can place your order. Okay, I'll be winding up this video as of now. Take care. Bye bye.